Good morning all and welcome to this morning's video. I have 4 pairs on watch today. I hope you had a great weekend, by the way, and I hope you are ready for this week ahead. So I have 4 pairs on watch, and those are soybean USD, West Texas oil, easy for me to say, wheat USD, and pound Aussie. So one of the things I've noticed since I started trading, or started to notice a little bit more, is that when a lot of the currencies look like they're in a bit of a squeeze, when they look like they're correcting, one thing I've started to know is that when I'm picking my pairs over the weekend and I get to the commodities after I finish going through all the currencies, I already know in advance that there's probably entries shaping up on the commodities. And one of the reasons for that is probably because money is being shifted. Okay, so wealthy people and the bigger players, they're not just taking their money out of stuff when it's squeezing, they're putting it elsewhere. Okay, so that would explain why structures start to shape up on other asset classes when they're kind of squeezing on others, because money is being transferred from one asset class to another. Okay, so that's just something I've noticed. But anyway, we've got a lot to get through, so let's go through soybean USD. So on the weekly chart, I'm going to start off on the weekly just because I think it's relevant. Now we have this near miss up here to this to this sharp move here where there was a big sharp sell off. Okay, and if you look here, we moved up. We have a near miss to that area as well. Okay, so often these near misses get filled, although not necessarily straight away. However, we do have this 1, 2, potential 3 to give us those typical structures that we look for, and we have an impulsive move up and a more corrective move down. Okay, so at some stage we may get an impulse up to give us that, which would give us that kind of 3-touch structure where this is the first touch, that's the second, that's the third. We break above, as we typically do on the higher time frames, catch people the wrong side of the market if we're going to move to the downside. Okay, and then that would be the middle section in the whole thing. However, if we only ever waited for that, we might be waiting a very long time. There may be opportunities which we could capitalize on the slightly lower time frames, on the daily chart and below, for a potential shorter term move to the downside. Okay, so if we just delete that a second, let's see if that's the case. Okay, so as we zoom in a little bit, you can see that we have this kind of spike here where liquidity was likely sat. Okay, and the clue was that we come back up, we near miss to that area, and we sell off. Just as we're doing up here, we're creating a smaller version of the same thing. Okay, where we have that with an impulse up, corrective middle section, push up, we tap into that area, and then we push down. Okay, but as we zoom in a little bit more, so I'm just going to zoom into this piece of the puzzle. Let's get that. There we go. So we did kind of wick through it, but most of the wick was below. Okay, so I'm not surprised that we appear to be gravitating back towards that area. And the clue for me is the fact that look at this weekly close here. Okay, when we have these heavy body, well, not heavy body, but we have a green candle like that with a big wick below it, that is often a good sign that we're going to push back up to the top, especially when we mostly wicked to the area and not all that much through it. Okay, so as I drill down, previously I was looking for, if you remember in last week's video, I was looking for sells within this area because we had tapped into that area. We had the evening star formation. We had an impulse back down. We were trading back below this high here. Okay, but one of the things that I've noticed, this may have been a little clue, where we have the bullish candle with a big wick below it, and then a bearish candle with a wick below it. That may have been a clue that we sometimes push up to test the highs to give what we call an M style pattern. Okay, so as I drill down, you can see that this correction, particularly early in the run, has become very wide relative to the impulse down which has preceded it. So if you were to look for what I was previously looking for, so if you was to look for a tap down from this area and a flag, because of how wide this has become relative to the impulse that's preceded it, this is much more risky, and we're more likely to tap the highs again, push back down, and then flag. We don't know all the reasons why these things happen, but one I would suggest is that the sellers who are selling within here get bored, okay, and they liquidate their positions, which causes price to break out of this range, tap the high again, and then often we see the move down and then a correction, and then price drops from there. And then we get that kind of M style pattern. So with all that in mind, and bearing in mind that I have to I only have 20 minutes for these videos. What I'll be looking for with all of that in mind, I'm not interested in entries from here anymore because of what I've just said. So what I'll be looking for, just to speed things up a little bit and taking that off the chart, I've got an alert set just below here just to see what happens. Okay, so not up here. I've got an alert set just below this area of consolidation there, just to see if we respond, because if we do and we just push to the downside from there, or we near miss it again and push down, I'm just going to take this pair off of watch. But for the meantime, what I'll be looking for as it stands is I'll be looking for a tap into this area of value, a 1 hour impulse below this area of interest, has now become an area of interest for me, and then I'll be looking for a pushback down, 1 hour push down, a 15-minute flag, and then I would look to get short on the break of the flag or with a risk entry within it, which I would filter on the 5-minute chart. Okay, so I won't be looking for a push down and a 5-minute flag, because this could be, okay, because of what I've just said, this could be because we've kind of tapped into this low and this low, which near missed to it on the higher time frames. This could just be volume accumulation to push higher to fill that high which we near missed to. Okay, so I'm just waiting for slightly more weight because I'm factoring in the higher time frames and not jumping in quite as early as I otherwise would have done if we hadn't tapped into these. Okay, and we didn't have that near miss as well. But if these weren't here, I would be happy to take a 5-minute entry because we're so far away from that. But because we have tapped into those, and this could be volume accumulation to break out to fill that high, which this high near missed to, then I'm just waiting for a little bit more deliberacy. So that is, where's my forecast? Let's stick that back on the chart. So West Texas oil is the next one. So on this one, you can see that we've tapped into this area here where we kind of have this structure here. We tap into there. I'm not surprised that we sold off from there because there was a big sell-off from there last time around. We tap into it, break just above. We push down, correct, and then we have the continuation, okay, confirming the move to the downside. We then have this area of consolidation here, okay, where volume was built, okay, and we break through these brick wall lows, suggesting there's a lot of liquidity there. Okay, we break just above. You see a little mini scoop double top there. Sometimes that happens, and then we get the impulse correction continuation. Okay, we correct. Okay, I am mindful of the fact, one of the reasons you can see this structure forming here, this potential impulse correction continuation, one of the reasons that I won't be looking for a risk entry from the top of this structure is because you could easily be tagged in and tagged out, and then price does maybe something like that, and then comes up to test maybe this high and perhaps that one again, which would give us that kind of structure. Okay, by virtue of, because of the fact that if we just measure this, because of the fact of how far we have pulled back up relative to this move down. Okay, so we pulled back about 75% of the range. Okay, so what I'm waiting for is the market to show its hand and a push down from this area and a flag, and then that would confirm the idea that we may be seeing an impulse correction continuation to the downside, and we know that the continuation tends to be of a similar length to the impulse which has preceded it, which will take us down to these areas, which doesn't surprise me because this is the sharpest move within all of this, okay, suggesting that this is where the liquidity is sat. So if we were to get what I just described a moment ago, perhaps we're pushing down to there before pushing up, which would then give us that structure. Okay, hopefully that makes sense. Some of these things I may do a little bit too quickly. I apologize. That's just what happens when you've been doing this for a while, but I do try to slow myself down so that you guys, if you're a bit newer or completely new to this way of trading, so that it makes sense to you. So on the lower time frames, you can see we broke below here and corrected below it. So at the moment, at least, this is suggesting that price did not find enough liquidity at the base of this structure to send it to the upside. But anything can happen in trading. What we also might be seeing, we may break out of this because we have this head and shoulders pattern. Okay, so we have this left shoulder, head, right shoulder. We may come up to test the neckline or break a bit higher and come towards the neckline, and or even retest the back end of all of this and then push down. Okay, so I'm factoring that in as well. So with all of that in mind, what I'll be looking for, you can see that we have tapped the area of value that I excuse me, that I suspected that we would tap into last week, because we had that impulse middle section and then the continuation leg out of it to give us that kind of structure, and this expanding pattern where we have lower lows and equal or higher highs. So what I'll be looking for is the same thing again. Okay, because of the higher time frames, I once again won't be looking for, and what I've just described, I won't excuse me, I won't be looking for a 5-minute flag. I'll be looking for a tap into this area of value, which we've done now, a 1 hour impulse back down below it, and then the same as I was looking for with the other pair, a 2-touch 15-minute continuation, and then I'll be looking for the 5-minute risk entry within that continuation, or a reduced risk entry on the break. And then I think I don't think if we got that, I think we'd likely smash through this because of the impulse which has preceded it and all the volume generated within it. And then I'd be looking to target this low down here, measuring 90% of that range, setting a take profit at the 90% area where price tends to pull back more deeply, and trailing my stop loss accordingly. So with soybean, just to touch on it, I would be targeting that sharp low there, which happens to be 90% of the range from here to here. So a take profit there, and I would trail my stop loss accordingly on that one as well. So we have I've set a Google Calendar reminder to remind me to check this pair in a couple of hours' time, because a couple of hours would give us enough time to get that 1 hour impulse down, and then it would allow for 4 corrective 15-minute candles. So I wait for a minimum of 6, but it would allow for 4, and then I can just check just to see if the flag has started to shape up. If it hasn't, then I'll just set another Google Calendar reminder. So, right. So on the high time frames, we've tapped into this area here. This is an example of an M style pattern. Okay, in my opinion, because we have an area we have a correction like that, which had the 1, 2, and the 3. We had the middle section within it. We tap into it, but we don't commit. The reason we likely don't commit is because this correction became very wide relative to the impulse down which has preceded it. Okay, that's a perfect example of an M style pattern, and I gave one possible reason why these occur a moment ago. So we then tap into this area above. Okay, we've kind of broken out of all this. Okay, so I'm waiting for a bit more deliberacy, because this could be, if you just look at, you can see, if you just look at how we're falling correctively. Okay, nature theory. So if we're falling correctively at the moment, this could be like a bull flag to push higher, to perhaps tap into that to give us a proper M style pattern. Okay, because of the volume generated here, where we tap into that, which was a sharp move. Okay, but if we get a bit more of a push down, we can potentially get involved in a short-term short, which is what I'll be looking for today. Do I think this is likely? No, but if it does, then I know that I have a statistical edge. So what I'll be looking for, if we let's just have a look at the daily again. So we've had the higher time frames hold more weight. You always have to remember that. We've had an impulse down and we're correcting. Okay, so what may happen, even though on the lower time frames it looks like this, okay, and it could be a larger bull flag to push higher for the reasons given. What we could also do is, okay, we may just drop out. Sometimes we get this and then price just drops out. Okay, and if you just separate these structures, we have this little structure here. We have this little run-in channel here, which broke to the upside. If this is a bull flag to push higher, a larger bull flag to push higher, this will likely act as the base, okay? And we may near miss to that area. That may be what we're doing now. That would be the base, and then we would push up from there. Okay, so when does that buy idea become invalidated? Okay, well, where it becomes invalidated, in my opinion and experience, is if we break below that. Okay, the start of this running channel, we break below and then we flag. And what I always look for, when a flag could be part of of another structure like this, the one that I've just drawn to push higher, then I always wait for a 3-touch. Okay, to confirm that this is separate to what has preceded it, which could be a buy setup. Okay, hopefully that makes sense. So what I'll be looking for is a break below here, a 1 hour impulse down below here, this area of interest, a 3-touch 1 hour flag. Obviously, this may not be ready by the end of the day, especially given the opening hours of wheat, which are a little bit different. A 3-touch 1 hour continuation, and then I would look for a 15-minute risk entry within it, or a reduced risk entry on the break, and then I'll be able to manage it down to this area. I don't think this holds much weight by then. Down to this area for something in the region of 3.5%, and then I would set a take profit here, just a shorter term move, and I would trail my stop loss accordingly for about 7%. Okay, so that is, do I think that's likely? I don't think it's likely at the minute, just because price has fallen correctively here. But you need to be on the ball in trading. The minute we start forcing our opinions on the market and saying that price will do this and will do that, as you see on TradingView all the time, then that's ego-driven trading, and ego is one of the biggest downfalls of any trader. So we have this area here. We have pound Aussie last on the bunch and just speeding up. We break above that wick, catch people the wrong side of the market and push to the downside. Okay. Now, one of the reasons this is last on the list is because of the sequence. We tap into this area of consolidation here, okay, which caused a sell-off, which completely broke to the downside and broke below this low here. We tap into that area by way of this reversal structure. We get a scoop double top, and then we move down. We move down very correctively, so this wouldn't really be where I was looking for a sell. It's not really sell price action. But then, as I was just talking about, as with wheat, sometimes we just drop out. Okay, so sometimes price falls correctively like that, and then we just drop out. Okay, and the clue for me at this moment in time that price is not going to move to the downside is because we dropped out and we consolidated below this low, okay, and below all of this, suggesting that there wasn't enough liquidity here to send price to the upside, and this is just an impulse correction continuation to push lower to potentially take out this low, which this low near missed too, okay? So as we zoom in, I am mindful of the fact this is looking a little bit bunched, so once again, we could end up with this could just be consolidation, which does that for a period of time, and then we get that M-style pattern again, or we just break to the upside just because of how correctively price has fallen. So once again, I won't be looking for a risk entry from the top of the structure. What are we looking for? You can see, what have we done again? We've near missed to these highs, okay? And we've fallen down quite correctively. So what I'll be looking for, I don't think this is likely by the end of the day either, but the market doesn't care what we think is likely. Okay, I'll be looking for a break above, specifically a break above, because we have this high. We've kind of tapped into it once. We've tapped into it again, almost just about tapped into it again and again. So each time we do that, we're kind of using up the liquidity. Okay, so if we were to just tap the area again and push down, this would be less reliable because we're tapping out all of the liquidity each time we kind of tap it, okay? So I'll be looking for specifically a break above, because if we are pushing to the downside, then after all these little taps into the area, or more or less taps into the area, we likely need to break above to take out the liquidity that is sat just above, okay, for this to move to the downside. And then I'll be looking for, once again, a 15-minute continuation, and then I would look to get short on the break or within it, with a 5-minute risk entry, and then I would manage it. If we did get that, once again, it would likely be all systems go, and then I would be targeting the lows that I just showed you, which I'll be targeting that low, okay, and managing my stop loss for what would be quite a big trade, but we'll see. We'll see what happens, okay? That is my forecast today, folks. I hope you've enjoyed this video. I hope it has changed your perspective, and if I place any trades, I will, of course, update you with them, be they a win, loss, or a break even. Thanks for watching, and I will see you again in the next video.